Hey everyone, I think we're back. We're back live. Great to be back here. I was just recording the recap three. Yesterday I did mention about the change log. This one's gonna be fairly quick. Want to discuss about the raise, and want to discuss about the priorities for the week. Well, for next week. Next week is, so first thing first, what I did say last week is that this week we should have had our first revenue and our first paid users. It did not happen. The reason for it is uptime, and we did solve uptime quite a bit, and that's where I'm happy. So we can go and look at our uptime. Is basically at 100% today, and that was about that evolved through the week, but we basically, even in terms of functionalities, we had to be slower. And the main reason for that was prioritizing uptime, and even in terms of pushing updates. The thing is, pushing updates is fairly easy, but then having an app that's fully reliable after each update is a bit more complicated. So now I feel more confident that we can ask some friends around to test the app. I expect that to be eventually even starting tomorrow. I personally, by a challenge, will ask some friends away to just test the app, go through the whole flow, and yeah, I think what we expect is that we have a full app launch by the 13th of April, so which gives us 8 days. Basically not next Monday, but the Monday after. And we have to optimize for sorry, I was reading some messages. We have to optimize for publicly what's your marketing strategy, but back end wise, how do we prevent abuse of the system? That's the main thing I'm concerned about, and our objective for that first month, it's going to be mid-month that we launch, but it's going to be about 100K in annualized revenue. 100K in 30-day rolling revenue that we generate, and we do have the reserve ratio to support that, and I'll personally come in and back the structure, so that we have the right reserve ratio. The point is, it's let's say you sell 100 challenges of 1K each. So the 100K accounts, you need to have the liquidity to. We know most will not pass just by stats. For those that pass, you need to have liquidity guarantees, and we'll gate the app. So if if we come to a threshold where we just do too many sales, we'll have to pause the app. So pause the new customers. Hopefully we come to a stage. To that stage, that'd be a really good news. I'm looking forward to that day, but that's why we need to limit the abuse, because if the system is getting abused, then that's where you can take on way too much risks. These are more technical stuff, but I'm here to talk about the journey and what it's like to build this stuff. Next week is going to be, that focus will add some new functionalities. It's still going to be very much around, I want to focus on mobile a bit next week, and then still going to be a big focus on uptime and making sure we deliver great experience to the customers, and it's going to be a lot about growth. On the raise, we are at 180. 180k raised out of 300. We've added another 72 hours to sell, mostly because we've had a few folks that want to come in with pretty big size that just did not have access to their wallets due to Easter. And overall, given the market, we're just happy to extend that. And we also had, some of the stuff related to KYC, where all provider need to get manual approval and just some small operational stuff. But we're getting this out of the way. I think now we're discussing about next steps, because if 300k in terms of liquidity is not enough. So to us, it's about how do you come up with the right specs, specifically for retail investors, because you want to have excess interest. And what we missed, in all honesty, is we had 2.5 million of interest, converted 10% of this. Even not even 10%. Yeah, it's not finished. So I'm confident we'll fill this fully. But even at 300k, it's 10% of interest. What can we do better? And I think what I'm leaning towards is to have a valuation that's based on the earnings of the company. And we had a nice discussion here on Discord about this. But I'm confident we can get to about 100k in revenue, 30-day rolling, which is 1.2 million annualized. Maybe we can discount that because it's the first month or whatever, but I think the market's coming to a stage where that might be required to think of revenue ratios, price to earnings or price to sales, or price to buybacks, which are price to earnings. On DeFi Llama, it's referred as such. And when, for example, if you take, I think we'll do about 40% buybacks. And we'll have a circulating market cap of 30%. So if you do your net buyback contribution on market cap, so 40% of, so you do 1.2 million in revenue. Percent of that's an 80k. If I'm not wrong. And so that means this is the amount of buybacks you do on a yearly basis. And if your market cap is of 30%, then that means that your implied FDV that you're selling it for is like what, 16 million. And I think we'll try and go this way and see, because that's a 10x. Sorry, that's a 10x PE. So 10x price to earnings, which is roughly, Monoshu is very competitive with what crypto is offering today. If we look at if we look at, let me share my X. There is someone that built a great tool about this to check the price to earnings. Where was this? Where was this? Okay, yes, that one. It's this tool. You can go and check it. hyperintel.xyz. And you can check that, for example, Hype buybacks, they are trading at, the valuation of Hype is at a P of 13.2. And you can see that the buyback, the PE is ranging between, between 8 to like 20. For reference, like a good, let's say take the PE ratio of Meta. Is 23. So it's subpar VS Tech, and I think we'll try that way. I think, and that's obviously if you don't have good revenues, then you won't have a good valuation. But I think this is fair. For example, if you take Aave in terms of PE ratio, it's 30x. So that would value, again, assuming like 30-day rolling of 100K, which is, I'm saying this, maybe it's going to be 10K, maybe it's going to be more. I don't know. I honestly have no clue. But I have to have targets in mind. P ratio of 30x, that's 45 million. If we were to have this ratio, LITS is 4x. And here, that's, I did cover on YouTube the lit trade against Hype, and that was part of the thesis there. And you see Sky is at 20x PE, so it maybe I think we'll do that. And but that's something I'm actually working towards, because if we, if we, and we'll see, we might I'm really not content or satisfied about this, but I also knew that's what I would get myself into by doing this. What I'm trying to assess is why, in between the raise announcement where we got like 100K views and now, like, a lot of things progressed. We went live with the free trial and stuff. So what can we do better to generate momentum? And is there even an opportunity to generate momentum in this market? That's what I have to prove. Because you have to understand that our business is constrained with, like, the velocity of growth is constrained by the number of capital we can raise, because we'll have to gate the ecosystem at some point, because we can't take on so much equity risks. So anyway, that's gonna be all for today. I'm gonna leave you on this very short one, and I see you tomorrow. And tomorrow we publish the recap of